In a bit, but we've got a very special panel right here in our studios. Vikash Kumar Jain is India strategist and head of India research at CLSA India. We have Nikhil Gupta, India economist at CLSA India as well. Gentlemen, great to have both of you here. So the context, right? The conference is kicking off coming Monday. Coming Monday. It's kicking off coming Monday. So I just want to start with that, Vishal. What are you aiming to do, and what should we expect out of the conference?
So this is likely to be our biggest India conference in terms of participation. We're looking at well over 300 plus investors joining us, nearly 100 plus companies or so. And what we are trying to do is basically what CLSA is known for, that is to offer unrivaled corporate access, as well as look at themes that are making headlines that are important for the markets at this juncture. What are the themes that are important for the markets? We have a lot of AI this time. We have a lot of global macro. We have a lot of Indian macro. We also have things like defense that we look into. Consumption is always a favorite when looking at India. So that's the other thing that we delve into across the various presentation, and a host of senior management CEO tracks which are there. So, and along with that, on the sidelines, a lot of very interesting conversations. That's what we'll offer at the conference.
Nikhil, for you, it's the first
CLSA conference.
CLSA conference? How's it been so far?
So far, so good. Very excited for this conference.
Yeah.
And as Vikash said, this is going to be the biggest CLSA conference, so I would like to take some share of that.
So markets, macros, right?
Yes.
You think more questions will be markets or macros? Because both are, now of course, the big market question is when will nominal growth pick up?
I think the macros have been quite well behaved in India, and I'm sure you'll talk about that. It's the market that's been a problem. So.
No, but growth, underlying growth has been poor, right? And I think is that the big talking point? When will that start to recover?
In fact, we'd like it to be the big talking point, because that's where India is getting better. Because I think I'll allow Nikhil to talk about it, but that's not where the complaint is. So,
but also, Vikash, you're starting off the conference against a backdrop of a largely positive view on Indian equities, right? Which is interesting. And before we get into the macros, explain to us why you think India can finally start playing catch-up in an otherwise great global equity bull run. We've just been completely singled out, and we know the reasons, right? We don't have AI, we don't have deep tech, valuations were a concern, we were delivering 5-7% earnings. What makes you confident that this is all set to change?
Yeah, I think, so that's the report that we wrote about today. The interesting thing is, if you try and understand, and for someone who's just a domestic investor, it's very difficult to appreciate what kind of a global bull run we've seen. So what we do is we look at the top 25 or so markets. These markets make up about 85% of global market capitalization. 65% of them have made a new high this calendar year. Last time when you had anything more than that was in 2007, when 70% made a new high in a calendar year. India is not one of them, which is very odd, because if you look at India is one of the few markets that if you look at this particular century, 25 years, it's made a new high in 19 out of those 25 years, which is the highest for any market. So it's the most consistent performing market. But what changed this year? Yes, some of those things that you mentioned did change. Yes, that should have taken excitement to other markets. However, the underperformance that we have seen in India is the biggest 12-month underperformance we've seen on record. That is versus EM, versus AsiaX, versus the global benchmarks. The reason was India, in the minds of global investors, due to certain events, got relegated. So if you remember, just to kind of jog your memory back, say in February, everybody in the US administration was, India is possibly going to be the first one to
do a deal. Yeah.
Even till April, May.
Yeah.
That got relegated to now. India is the one with the highest tariffs, almost. In fact, higher tariffs than China at this juncture. So, plus you have the geopolitics, which is always a structural risk which can become hot and, because we don't really have the best of the relationship with our neighbors. That is always a thing which can come up as a risk from time to time. It did come up this year. So from that perspective, there's a slew of these negative news flow, which also caused worries around, okay, what will happen to GDP growth? I think, and we had earnings decline. In fact, if you were to track back and look at performance, our worst performance has been in periods where we've seen earnings getting reported. This time, it's not the case. So a lot of all of this is now going to kind of reverse, in my opinion, with the US president already talking more positively. Suddenly, that fear that India-US relationships is kind of going to become really bad, that should reverse. Plus, our earnings growth numbers are doing okay. GDP numbers, of course, Nikhil's going to talk about.
How much are you expecting this year and next year earnings?
So if we look at consensus, I think, as a strategist, I pay a lot of attention to that. If you look at FY28 over FY26, there's a 16% CAGR over 2 years that is expected. As compared to, if I were to look at that FY27 over FY25, that had gone down to almost 11% or so. So there's a that also puts us better in terms of earnings growth ranks. Only Taiwan, Korea, and 1 or 2 other markets are better than us. So all of those become much better, and headline news flow improves. See, if headline news flow is bad, you don't want to really, your focus on long-term growth reduces. If that starts improving, then the whole long-term growth story can come back.
So headline news flow, basically, India-US trade deal. Trade deal has to happen.
Trade deal along with other macro things which are anyways improving, which I think Nikhil can answer better.
So is there a high probability that India outperforms from here on, and the FI money that's deserted us for the last many, many months, close to a year or so, do you think that comes back?
Yeah, I think, outperforms means that outperforms what? See, I think it is, if this is a global bull market on the theme of AI, it is going to be very difficult to outperform the AI stocks if the bull market continues.
Right.
But selectively outside of that, the kind of underperformance that we have seen, that's pretty stark.
Right.
So versus a few other things, definitely India should start doing better. So from being relegated to right at the bottom, it has reasons to come back kind of at least in the middle.
Can we Nikhil, macros, yes. What's the view? Will growth pick up? What do we have? Are there enough ingredients?
Yes, so Prashant, if you look at India's macro numbers, and you pointed out
I'm not talking about the macros, they're all very good reserves. I'm not talking about that. I'm talking about growth, nominal growth. There is enough in the tank for that to start to fire in a more meaningful way.
Okay, I tell you the numbers which we are expecting it to be. For this year, we are expecting nominal growth anywhere between 8.5%. To be precise, 8.4% for this year. And we are expecting it to pick up to somewhere around 9.5% next year. The important thing to note is next year will be the third consecutive year of sub 10% growth. In fact, our forecast for FY28 is also about 9.8, 9.9. So we are broadly saying we will remain sub 10%. Now, that will definitely look much weaker to almost all who have been invested into the market or looked at India's economy for a long time. The question is, or the way I look at it is, we are now a $4 trillion economy, right? We are now the 5th largest economy. So the size actually matters, right? How long can we continue to grow 12 to 14%? We know we have certain expectations and we want our economy to grow at a certain level. But it is just not possible the bigger we become, right? Yeah. Not only that, we also need to understand what is happening globally. If you talk about 1970s, 1980s, 1990s, or even 2000, at least till about 2007, there was this entire globalization wave. Trade used to grow at 1.5x of global GDP growth, right? Then it grew in line with global GDP growth till about 2019. And in the last 5 years, I mean, protectionism as a policy has started becoming more prominent beginning 2008. But post-pandemic, it has actually picked up at a different level. And I think all of that will reflect not only in global GDP growth, but India will also be affected.
Nikhil, will foreigners buy this argument? I mean, we are still a poor country, right? Under $3,000 per capita. At this stage, if you're talking about, okay, let's settle with under 10% nominal growth.
Right.
I mean, that is, it's not the promise that we made.
Promise we made to who?
I mean, all of us.
The world at large.
Okay, right. Okay, so from per capita income perspective, if you look at, let's say if I grow at 9.5% nominal growth, and then a depreciation of 1.5%, let's say, loosely speaking, so 8.5% in nominal terms, and then a population growth of about 1% or so. Actually, it is below 1% now, which means we are going to grow our per capita income in US dollar terms, 7.5%. I don't think it's actually bad. I mean, if you do the calculation, we'll soon, I think by 2014, and please don't hold me to this, I'm just giving you a rough idea of the calculations that we did. About 2040, we will be $10,000 per capita income, and about 2047, which is the centenary.
By when, 10,000?
2040, by the end of next decade. And by 2047, I think with these kind of forecasts, we will be $15,000 to $20,000 per capita income.
You know, before we talk more granular about the market, Vikash, I just want to go back to a point that you made, and that really caught my attention. When you said the geopolitical, risk premium or whatever you want to call it. Now, the events that happened in April here in India, and we've had an unfortunate incident in Delhi again. So are you saying that that has come in on India as an added factor to watch on a consistent basis? Because that becomes another then issue that one has to contend with while you're trying to map FPI flows. And I mean, have you heard, what is the commentary you've heard from foreign
So what I
clients
meant, let me clarify that, is that, see, the fact that we don't have the most friendly of neighbors is a reality. But if nothing happens for a long time, then people forget about that risk.
Yeah.
If something happens, then that risk comes at the forefront.
Yeah.
So amongst a lot of complaints that people had on the market, this became an added complaint. If something like this comes up, then you don't want to think about long-term growth. So all of these things need to subside. And which is, I think, what will happen over the coming weeks and months.
Okay, all right. Nikhil, let me get you into the conversation now. We've got this very, very tepid inflation prints that are coming in there. What do you expect from the RBI in the upcoming December meet?
All right, so our forecast, we still maintain 25 bips rate cut in December, and we expect another 25 bips in February. However, with this 0.3% inflation that came out yesterday for October, I'm sure the noise for a 50 bip rate cut will become louder. I still believe, if you look at the details, we know that it's purely the food inflation. The core inflation has actually inched up last month. And even now, of course, it is much lower than RBI's forecast that they provided us in the last meeting. But even now, we believe that headline inflation will be back to 3.5% to 4% by the first quarter of FY27. So by mid-2026, we'll be back to 4%. And that is why I believe it's better. It may be possible that they do 50 bips rate cut in December, which is not our base case. But then I believe that would be the end of this rate cut.
But Nikhil, there are some who are arguing, and we were discussing this with Lata just a while back. There is also that counter argument that if you're looking at roughly ballpark 7% GDP growth this year, then is there a need to move immediately now after having delivered 50 basis points, or would the RBI look at deferring it? And if that is the case, if the RBI decides to be a little conservative, hold their firepower, then the market implications of that, I don't know if that's been factored in.
There will always be factors on both sides of the game, right? So 7%, definitely we are also expecting 6.9% real GDP growth for this year, but this is divided into two halves. The first half till September 1st and second quarter, average growth we are saying will be about 7.8, 7.9. Second half will be about 6%, which makes it around 7% for the full year. So yes, they may want to hold on, but inflation of 0.3%, I mean,
doesn't get better than that.
The only time since 1990s when we have got lower inflation or less than 1% inflation was for 3 consecutive months at the turn of the century. That was October, November, December 2000, when we had 0% inflation. Apart from that, we have never seen lower than 1%.
0% inflation is also...
and sorry, one more point.
Over here.
Just one more point. This is first month. We expect inflation to remain below 1% in November as well. So
on a lighter note, I'm just trying to understand, 0% inflation sounds great in discussion. Do you feel that your bills have gone down?
Yeah,
Do you?
You don't see it when you...
I don't think so. I think everything is going up.
When you get your paycheck, you don't see it?
Yes.
Now we're talking.
Disinflation, that's disinflation.
that is what matters for growth perspective.
Okay, let me ask you this other big thing, right, which is AI. I think both of you would... So one from... Nikhil, you start first. In India, right, this big consumption thing, not just here, everywhere. I mean, who is the consumer? Is a white-collar worker, right? And I think you've done some work on this in terms of whether AI... and the market on the question on AI, Vikash, I'll come to you. But do you think it's a risk here in terms of it may not immediately
employment
show
or something,
income growth, employment? Is there any way to tell at this stage?
Right. So, Prashant, see, AI, of course, is the theme globally at this point in time. And we need to understand it is led at this point in time by the US and China, right? For most of the Western world, if you look at growth, there is another way to look at growth story, which is from labor market perspective. You look at the growth in employment and you look at the growth in productivity. Most of the Western world and China also, they have reached a limit in terms of pushing their employment growth higher. So if they want additional growth, it has to come from productivity. India is not at that development stage. We need still at least 7 to 8 million jobs every year, and employment growth has been the primary driver of growth for India. And for the next decade as well, that is going to.
Is there a risk that gets disrupted?
That gets, sorry?
Disrupted. That we need that, but you think...
possibility.
It's a risk.
Because we need to understand the globalized world we are living into. Even if we want to focus more on labor employment growth, companies cannot avoid the competition that they are getting from the competitors outside India. So if someone else is becoming more technologically advanced, because of which they are becoming more efficient, which is making them more competitive, our Indian companies also have to do that. And that puts a risk on if they will be able to grow their employment or jobs at the same rate where we want it to.
Vikash, we had Naren with us, and he said the biggest risk to India, the question is still AI, but from a market perspective, is not local, but is global, that the AI bubble bursts. Any thoughts at all?
With all due respect to Naren, of course, he knows more about markets than me. But, I would say that, yes, that's not something that we should wish for, because if there is a, burst...
No one is wishing for it, but I mean...
No, I'll tell you, because some arguments are like, I don't want to look at India because it lacks in AI.
Correct.
So some people are feeling that, okay, if the AI story kind of goes down,
correct,
and that's the point where India comes back. But yes, eventually it might happen. But India is still an expensive market on an absolute multiple basis. If there is a global correction, then multiples will contract. And even India will see the correction. But in general, to kind of segue into what Nikhil was saying, I have a slightly more optimistic view on AI in India. See, I think what our true strength is a very young population, which what that allows us to do is be great adopters. All of us, we might remember that we hardly had anything called a 3G. It never worked. There was a time, not even 10 years ago, where people like you and me used to struggle to use even 1 GB of data in a month. When 4G came, we leapfrogged. If you look at even something like payments, digital payments, we kind of leapfrogged and caught up. Unless you believe that AI is a completely different animal, and the winners will be the ones who provide the AI service, which did not happen with internet. Which in fact, I would say, even the ones who are providing the 4G service, they are not the biggest of winners. The winners are all the other apps which mushroomed around it, which people could use. So it's really, how do you put that to use? To put that to use, you need early adopters. And that's where I think the Indian population might eventually come in. But all of this is not what people will focus on at this stage of the global bull market. But eventually, I'm not that not that negative, because I can say that we are great adopters, or you can say we are great cloners also, and I think cloning is something which makes a lot of things successful. You don't have to really have all the money to invest and test.
I'm not sure if that is the reason, or maybe the reason is more tactical, that you actually don't have a very negative view on IT. I don't know if you're seeing some shred of evidence that they're coming up with some ingenious idea of using AI better and then, charting the next phase of growth. I don't think you're very negative.
In fact, I have
IT,
a contra-positive opinion.
Exactly, yeah. So explain that to us.
There are two reasons for that. Number one is, I think this India, don't think of it just a trade thing. But all of these headlines meant that India-US relationship is kind of going down.
Yeah.
If that starts reversing, then that should be positive for IT. And secondly, when people are trying to implement AI adoption, that's where I think even our IT services companies will be used.
They'll fight back.
Used, and they will get their contract. So initially, it could be good for them.
I'll urge both of you to come back. It's,
We've not even started
12-15 minutes is too less, but that's what we are doing right now.
I'm sure you can carry this conversation with our colleagues during the conference.
We will. And best of luck to both of you for the conference. The fantastic duo from CLSA. Thank you very much for joining us here. Well,